In this video, we'll talk about Cathie Wood's new predictions for the crypto market and Dogecoin. Before we talk about that, let's look at what Dogecoin holder just said about the crypto market. So he said that, since I created Dogecoin as Saylor 8 years ago, calling out crypto frauds only serves to make me a target for the most terrible garbage individuals in the crypto industry. I believe that the reason crypto is so full of frauds and rubbish is that it does a poor job of regulating itself. Instead of being angry at frauds, the space promotes and defends crooks, regardless of how evident it is, by continual poor conduct. It receives what it deserves. Marcus said that scams frequently occur in the crypto space because the community is unable to govern the environment and cleanse it of fraudsters. It does a terrible job of regulating itself. Rather than going after frauds and scammers, the crypto sector enables and defends scammers. As a result of the community's chronic conduct, he stated, the crypto sector gets what it deserves. Also, Jackson Palmer, the other founder of Dogecoin, then said that, I think Web 3.0 is a hammer looking for a nail, and it doesn't provide any value to society in any meaningful sense. Every 2 or 3 years, a new story emerges. Bitcoin was supposed to replace all of these banks who had just ripped you over in 2009. When it didn't work out, the narrative became that it was merely a store of value. Then it shifted to ICO, which democratized financing, and most recently, we went through the DeFi story, which was a pure fake. Now we have NFTs, which are merely the latest in a long line of shifting storylines designed to bring in a slew of new customers. Now coming to Cathie Wood's new predictions for the crypto market, take a look at this. So, starting this month, Cathie Wood's ARC will be issuing an in-depth report monitoring Bitcoin's market action and discussing where we think the market is heading. We'll look at her predictions for Bitcoin because of how much it's affecting Dogecoin's price at the moment. So in the recent report, they found some interesting data for the crypto market. Bitcoin concluded the month of May down 17.2%, falling from 38.5K to 31.8K. Also, a new record of 9 consecutive red candles. No matter how you dress it up, that's a horrifying truth. However, it indicates a probable oversold position. Bitcoin has dropped 57% since reaching an all-time high in November 2021. In comparison, the average peak-to-trough drop during past bad markets has been 76%. Also, despite the ongoing sell-off, Bitcoin has yet to breach any key trendline. It is now trading above its on-chain cost base of 24K and above its 200-week moving average of 22K. The Bitcoin network handled Terra Luna's sell-off and the ensuing market sell-off admirably. The worst appears to be over, with Bitcoin not breaking below any key trendline. Axie, nearly 66% of Bitcoin's supply has not moved in over a year, demonstrating the market's longer-term focus and a holding base with more conviction. And despite the tremendous market movement, Bitcoiners continue to hold as if this is their one opportunity at economic independence in their lives. And then the report said, on average, short-term holding positions slid minus 35% below their break-even price. Who is selling all those cheap sats if Bitcoiners are holding? Who are they? Short-term investors, and they're nothing near breaking even. There's a short-term holder genocide going on out there. Also, Bitcoin's open interest in the futures market has reached an all-time high of almost 450K Bitcoin. If you don't know, Perpetual Contract Foundation usually indicates market direction. It is now trading at a bullish discount to spot. This is significant because considering the considerable open interest outstanding, we feel the perpetual futures discount suggests a probable upward trajectory in Bitcoin's next big price movement. Also, Michael Saylor is still very bullish on the crypto market. The crypto market upheaval is great for Bitcoin, according to Michael Saylor. Despite Bitcoin's challenges to maintain a price over 30K, he has another big forecast for it. He recently claimed that despite the laws, Bitcoin will increase to 10x. He said, consider stablecoins. Both the crypto crisis and the USD meltdown taught the current crypto market and all investors on the concept of risk at the same time. With 19,500 different varieties of coins, you're bound to receive a variety of flavors of danger, but how do you estimate the risk? In a world where everything is unexpected, he says that Bitcoin is the one constant. People need a safe zone to stand apart from the incursion of a government, an agency, or a corporation in a market full of turmoil, commotion, and anger. I think this whole crypto crisis will be excellent for Bitcoin. It will speed up long overdue stablecoins, altcoins, and exchanges regulation. It's about breaking the political silence. It is informing the world about the differences between Bitcoin and security tokens, making it easier for major institutions to enter the space. He then said that there is currently no good hiding location in these marketplaces. Across the board, the market is in a bear market. Bonds, like currency derivatives, are not a safe haven. To stay up with inflation, stocks must increase their cash flows. When it comes to regulations, he is quick to remark that he despises regulators and is opposed to their doing anything because if they don't, the industry will remain anchored at trillions of dollars, $1, $2, or $3 trillion. When they accomplish something, you'll see people like Goldman Sachs CEO David Solomon. He also said, "Although we believe the crypto economy is here to remain, we can't custody it." According to him, authorities must define what constitutes a crypto security commodity or property as quickly as feasible. When these standards are clear, investors will know exactly what they're getting into. He believes that authorities should address the issue of stable currencies as well as the requirements for a crypto security right. Luna was definitely a crypto security, as there was an issuer and someone with the authority to make decisions. He believes that regulation of crypto securities would be hastened because many of them are unregistered securities with little transparency. Moving on, let's talk about another important analysis. Mike McGlone, senior commodity strategist for Bloomberg Intelligence, talked about the crypto market in a recent interview. He said, "In the near run, the suffering has been more apparent, with Bitcoin losing money for 9 weeks in a row. Also, cryptos and other risk-on assets are reacting to the present macroeconomic environment. The crypto market has seen some of the finest returns in global markets. The emergence of a new asset class frequently coincides to 4-year cycles with parabolic bull runs followed by multi-year downturn markets. The losses have been exacerbated by 2 factors: the start of economic tightening measures by the Federal Reserve of the United States and the collapse of the Terra environment." Also, McGlone said that Bitcoin and other cryptos must suffer the most losses because they had seen the greatest increases. When an asset moves in one way and subsequently reverses to a mean price or bottom, this is referred to as mean reversion. On the latter, the senior commodity strategist stated that calculating a specific price bottom is difficult. Bitcoin has been rising in lockstep with the Nasdaq 100 and both just reached their 100-week moving averages when Bitcoin fell below 30K. According to McGlone, the patterns appear to point to greater losses, but Bitcoin should come out ahead. This possible surge will be fueled by institutional bids, since Bitcoin is still being accepted by global institutions, as well as the crypto's inelastic supply. Despite its recent expansion, McGlone believes that only a small percentage of investment companies have Bitcoin in their portfolio. This may change in the next years if Bitcoin becomes global collateral and begins a fresh rise to 100K by 2024. McGlone remarked on Bitcoin's price future perspective and probable bottom. He said, "I think 30K is a really good support pivot in Bitcoin. It basically requires the equity to continue falling in order to drive it lower. But I think it's Bitcoin pumping into excellent support, and I fully anticipate it to reach to 20K, but I doubt it. I believe it'll return to and beyond 100K over the next 2 years." The present decline may be beneficial to some of the most promising projects in the crypto market. This will aid in the removal of speculative assets, leaving only projects with strong foundations. These initiatives may be able to maintain market share in conventional marketplaces. According to the expert, the crypto market accounted for barely 0.5% of worldwide equity market capitalization. It is now approximately 1%. McGlone also believes Bitcoin and gold will be 2 of the finest investments to own in the next years as the economy deflates and equities fall. However, the precious metal may lose market share to the leading crypto. And then another analysis came from Lucas Autun-Euro, the head of research at analytics firm Into the Block. According to him, some on-chain indications show the crypto market's current decline may not be as severe as previous bad markets. Autun-Euro admitted that it is becoming harder and harder to say we are not in a bear market. Despite the fact that the overall crypto market value is down 57% from its all-time high of almost $3.07 trillion in November, Autumuro argues that fundamental indicators have declined less than in past bear markets. He then said, because a large percentage of demand originates from speculation, it is usual for transaction costs to fall precipitously when trading mood deteriorates during weak markets. In May 2022, Bitcoin's daily transaction fees averaged more than $500K, up from $130K in May 2018. Ethereum and other crypto assets have followed a similar trend of less significant declines in on-chain activity than in previous bear markets. Despite recent unfavorable market action, both Bitcoin and Ethereum are showing constant improvement in development activities. He also said, commitments to the Bitcoin network have increased by more than 50% in the last 2 years as developer efforts have constantly improved. This has been one of the few leading signs for crypto development since, as an open-source ecosystem, it relies on developers worldwide to contribute to the ongoing enhancement of these networks. Now coming back to Dogecoin, currently, Dogecoin is trading at 8.1 cents. This week we've only seen it trade sideways. I believe Cathie Wood is still right about the market. An ETF approval is what we need to get back on track, and I think we could get it sometime later this month because of all the pressure that's been building up on the SEC.